Alright, for this Form 8863 tutorial, I want to go over how to complete it to claim the American Opportunity Education Tax Credit. Now, in this scenario, what we're going to have is we have taxpayers here, Jane Doe, John Doe. They have two children that are in college, and so both kids are eligible students for this credit, so the parents are going to claim the credits on their joint tax return. So I do have the 8863 in front of us, which we'll go through, and it is part of the full 1040 for John and Jane Doe for the 2022 tax year. So they're filing a joint return here, and they are claiming their children as dependents, right? So Adam and Jenny here, again, ages 18 and 19, they're both dependents because they're full-time students. All right, so in addition to this, I do have one slide which I want to go through first, just to cover some background information on the American Opportunity Credit itself, and then go into more detail on the fact pattern that we're going to be working with. So the 8863, it's used to claim one of two credits, right? So the American Opportunity Tax Credit is available, and the Lifetime Learning Tax Credit is also available. Now, when you file this for a student, you're only supposed to claim one or the other. You can't claim both at the same time. And the American Opportunity Tax Credit, the one we're going to cover in this video, is a little more limited. There's only so many years you can claim it. There's only so many types of expenses that you can deduct, and there's some other requirements that otherwise are not applicable to the Lifetime Learning Tax Credit. All right, so what is this AOC, and then what are some of the elements required to claim it on your return? So the tax credit here is a credit for the amount of education expenses paid during the year. So this credit is available, and it covers the first 4 years of post-secondary education. So in other words, once you get out of high school, if you start college, you've got a 4-year bachelor's degree, you can potentially claim the AOC for each of those 4 years. Now, once you've claimed the credit for 4 years, you're no longer eligible to ever take it again as a student. So if, for example, you're a student and you get your bachelor's degree, so you claim the credit for 4 years, you graduate, and then you want to go back to school to study another degree, you can't use the AOC anymore because you've already claimed it in a previous 4 years. Now, you might be able to get the lifetime learning credit, but the AOC is done. Now, in order to claim the AOC, you need to be pursuing a degree, so you can't just be taking classes without being part of a degree program, and you have to be enrolled at least half-time. So if you're only taking one course a semester, it's not going to work. You really need to be either a full-time student or, full-time is generally what we see, but if you're enrolled at least half-time, then you can still qualify for this AOC. Now, the maximum amount of credit is $2,500 per student per year. Now, the way that the credit works is you get a credit for 100% of the first $2,000 spent on education expenses, and then you can get an additional 25% of the next $2,000, but the total cap is at $2,500. So the maximum amount of credit you can get per student per year is going to be $2,500. So in our scenario here, we've got parents that have multiple dependents, so they're going to be able to claim this $2,500 per dependent. Now, what is a qualified expense for purposes of this credit? So certainly the tuition and enrollment fees, so the stuff paid directly to the university. But you can also include things like books and other materials that are required as part of the class or the curriculum. So a lot of times, obviously, you'll pay the tuition directly to the school, but if you have to go off campus to another bookstore to get some books and other materials, as long as they're necessary in connection with the class, you can include those in computing the credit. Now, if the costs for your next year's tuition are prepaid, so if you're looking at your 1090-18 and you see box 7 is checked, you can still include those in the current year, right? And so and that is often sometimes what happens, right? So let's say it's December 2022 and you want to pay the tuition in December for the semester that starts in January 2023. If you do that, because individuals are cash basis taxpayers, if you paid it in the 2022 tax year, you can take the deduction in the 2022 year, right? You don't have to roll it to 2023 or wait for your 2023 taxes. Okay, so let's look at the fact pattern itself. So Jane and John Doe married, filing jointly, and have 2 children, right? So they've got Adam. He's 19. He's a full-time student in Florida, and this is his 2nd year in university, right? So he was a freshman last year, sophomore this year. Jenny is 18. She is also a full-time student in Alabama, and this is her 1st year in university, so she is a college freshman. Now, Jane and John paid Adam's tuition for the 1st semester of $4,500, and this was reported to them on the Form 1098-T in Box 1. And then in addition to that, the other qualified expenses, so those books, other materials, were $250. Now, here's what's important to note about Adam. Adam's tuition for his freshman year, 2nd semester, so that spring semester, January 2022 through May 2022, the parents paid that in advance in December 2021. So when they received the 1098-T for 2021, Box 7 was checked, and it included those amounts that were prepaid for that semester. The reason why that's important is because even though Adam was enrolled spring 2022, and arguably tuition covered that period, those amounts are not going to be in the 2022 1098-T. And that's because John and Jane paid it in 2021. They've already claimed those amounts on the 8863 in 2021. All right. Now, what about Jenny? So Jenny's tuition for 1st semester was $6,205. Also, it was reported on a 1098-T in Box 1. And then those other qualified costs were $125. Now, in 2022, no additional payments were made to cover 2023 tuition, so that spring 2023 period. So the 2023 tuition, John and Jane paid that first week of January 2023. So the 1098-T is not going to have Box 7 checked for either of them. All right. Okay, so now let's have a look at the form itself, and we'll start going through all of these relevant pieces in the 8863. Now, first thing to notice here is the 8863 really has 2 pages minimum. This first page with Part 1 and Part 2 is kind of like the summary. So if you have multiple students, all of those totals are going to flow back up to this 8863, and this is where we compute the credit. So we have page 1, 8863 here, and then we have a separate page 2, part 3 for each student. So this part 3 is going to be completed for Adam, and then we have the second part 3 completed for Jenny, okay? So if we have a look at part 3 for Adam first, so obviously some preliminary information on the student and the university itself, right? So this stuff is pretty straightforward, right? We have the name of the student, his tax ID number, and then information on the university, right? So obviously all this stuff you can pull directly from the 1098-T. Now, question 2, they're asking, did we receive a 1098-T for this institution for 2022? Answer is yes. And then question 3, it's asking, did we receive a 1098-T for 2021 with Box 7 checked, right? And we're also saying yes, right? Yes for Adam. And again, that's because the portion of that 2022 spring semester cost was paid in 2021, and so those amounts are reported in the prior year, doesn't apply to this year. Item 4, we entered the tax ID number, so the EIN for the university. And then in question 23, it's asking us, has the American Opportunity Credit been claimed for this student for any 4 prior tax years? And so the answer is no, right? Now, this question I don't like the way it's worded necessarily because I think it's a little misleading. What they're asking here is, have we claimed it for 4 years in any prior years, right? It's not asking us, look back 4 years and did you claim it once, twice, 3 times? It's asking us, have we claimed it for 4 total years in any prior periods, right? And again, that's important because if you've already claimed it 4 times, you cannot claim the American Opportunity Tax Credit again, right? So you would check yes and stop, and you would skip to the lifetime learning section. But in this case, no. Adam has claimed it once in a prior tax year, but not all 4 yet. So we can select no, go to line 24, and keep completing the form. So was the student enrolled at least half time? And the answer is yes, right? And we are pursuing an actual degree, right? We're not just taking classes without pursuing a degree at the end of it. So we can select yes there, and then question 25, it's asking us, have we completed the first 4 years of post-secondary education before 2022? No, right? So no, because he's only been in school 1 year. He hasn't completed the first 4 years yet. And then 26, very important, right? If the student was convicted before the end of the year of a felony for possession of distribution of a controlled substance. So if you have a felony conviction, you can't claim this credit, right? That's effectively what it's asking here. So in our case, Adam, no, he hasn't had a felony conviction for these purposes, or any purposes for that matter, so we can select no. And then we move on down to lines 27 through 30. So this is where we complete the more financial metrics on the credit. So on line 27, it's asking us to enter the total qualified education expenses, but we can't enter more than $4,000. So if we look at the fact pattern, remember Adam had $4,500 in tuition, and his other qualified costs were $250. But in this case, you can only enter $4,000 because remember the credit is capped at $2,500. So you're only using $2,000 as kind of like a base up to $2,000, and then you can get maybe 25% of the next $2,000. Well, in our case, we do have well over $4,000. So we start with 4, subtract $2,000 from line 27, right? It's asking if 0 or less, then enter 0. On line 29, multiply line 28 by 25%. So we've got our $500 number there. And then this is where we figure out, well, how much of the total credit is actually going to be allowed on the return. And so if line 28 is 0, enter the amount from 27. In this case, it's not 0, it's $2,000. So the correct computation is add $2,000 to the amount on line 29 and report here as the result, okay? And then this number is ultimately going to be reported up here, right, on line 1, but we have to complete the rest of the parts for Adam's sister, Jenny. So we go down to Jenny, same thing, right? So we have her information, the name of the institution. She did receive a 1098-T for 2022. Box 3, it's asking us, did we get a 1098-T for 2021 with box 7 checked? No, right? Because we didn't get a 1098-T at all because this is her first year. Enter the EIN for the institution. Again, you can pull all this information off the 1098-T. And then the same questions as they were posed to Adam. We have not claimed the American Opportunity Credit for 4 years. We were enrolled at least half-time and pursuing a degree. She has not completed the first 4 years of post-secondary education, and she was not convicted of a felony related to drugs. Okay. Now, the American Opportunity Credit computation, the same thing as what we saw with Adams, because both kids had tuition for those periods that were well over $4,000. So Jenny's education costs were $6,000 and change plus the books. But remember, again, you can only enter $4,000 as the ceiling as far as this computation is made. So she gets the same $2,500. So now that we've got $2,500 and $2,500, we report the total up here in Part 1, Line 1. Now, Part 1 and Part 2 are both going to be relevant for the American Opportunity Credit. If you're only doing the lifetime learning credit, then Part 1 is going to be blank for you. But in our case, the AOC, we need to do both parts. So the first part here, the way that this form is working is it's trying to figure out for us what is the maximum amount of the refundable credit we can get. And it's because there are certain phase outs depending on if your income is above certain thresholds. So you really just go line by line, enter the information as it's asked, and then you compute the amount of eligible refundable credit, which is always 40% is the maximum amount of the refundable credit of the total that you're going to have up here on line 1. Now, why is this an important computation and why does it matter? Refundable credit means that even if your taxes are reduced to 0, you can still get a refund, right? So the government will actually cut you a refund check even if your taxes are 0. Non-refundable credits work in that they reduce your tax liability dollar for dollar, but if you have credit that goes beyond 0, so in other words, if your taxes are reduced to 0, but you still have some non-refundable credit, that's it. You can't use it, right? The government will not actually cut you a refund check if your tax liability has been reduced to 0. So that's why it's important to figure out what portion is refundable and then what portion is non-refundable. Now, in part 1, once you've computed the refundable portion of the credit, which in our case is $2,000, the difference is going to be the $3,000, right? So, and that's the non-refundable piece. So when you think about this conceptually, $5,000 is the total amount of tax credit we get for education purposes, but it has to be bifurcated between what's refundable and what's non-refundable, and then you'll see how that's reported differently on the tax return itself. So the refundable portion of the credit is going to be reported on Part 2 of the Form 1040. The non-refundable piece is on Schedule 3. So there's the $3,000 non-refundable credit coming through from the 8863, right? So it's reported on Schedule 3, Part 1. Schedule 3, Part 2 does have refundable credits here, but the education credit isn't actually reported on this page, right? The education credit that's refundable is reported directly on page 2 of the 1040 in the payments section. So we can see down here, line 29, American Opportunity Credit from 8863, line 8. That is the refundable portion. So there's the $2,000 that's refundable. And then the Schedule 3 non-refundable piece, that's flowing through and reported up here on line 20. So if we look at this, kind of just work the math through, the total amount of tax, so John and Jane's income, $105,000. The total amount of tax that they owe is $9,084. Now the $9,084 is reduced by that other dependent credit, the $1,000. That's done separately. That's not part of this video. That's just done on the 8812. And then once we reduce it by that, you get a further reduction for the amount of non-refundable credit, the $3,000 coming through from Schedule 3, right? So they get to whittle their tax down to $5,000, and then they get their federal withholding, and then again they get a refundable credit of $2,000. So in effect, they've got the full benefit from this tuition and fees education credit, right? They got the $3,000 credit offset there. They get a full $2,000 refund for the refundable American Opportunity Credit. So this was a very, very good choice for the parents to report this on their return, right? It's a good thing they didn't miss it. Okay. All right. So that covers it for this video. Thank you so much for watching. I hope it's been helpful. If you have any questions, feel free to leave me a comment below. And as always, I look forward to seeing you again on the next video. Thank you.